Happy New Year and welcome back to my YouTube channel. If you are new here, thank you for coming, and if you are a returning subscriber, welcome. It's been a while. It's actually been a while since I uploaded any videos. Just been busy with stuff, you know how it goes now. So yes, I've been sorry. So I just wanted to just drop this video. I've been saying I was going to make a video, just keep going around in circles, so I decided to do this video today. And this is actually going to be a very raw, unfiltered and unedited video of just me recording my screen and introducing you guys, my subscribers, my followers, to smart money concepts, supply and demand, basically, right? So without further ado, we'll just go straight into it, right? And as we all know, most traders spend years looking for perfect indicators, RXI, MACDs, moving average, and all of that. But the truth is, that's not what really moves the market. Over time, you even tend to see that those things are slow, and the market just moves with imbalance, orders. Not necessarily more buyers than sellers or more sellers than buyers, but just orders, volume of the orders, right? And most times those orders come from big players in the space. You know, retail traders like us, like me and you, we just about a very, very small percentage in terms of market cap or market share, right? So it comes from big players. So now what we're going to do is to just pay attention to the footprints of all of those big players and be in the same direction that they are in, right? And the term supply and demand. And once you understand this concept, you stop chasing the market and start trading where the big players actually enter. All right. So most retail traders do the same thing. You know, buy when the market is already. Of course, you want to buy in the market, but they buy when the market is already buying, and they sell when it's already selling, and prices can reverse at any point, right? But instead, you want to buy. Right, you want to buy from specific points in which the buy should start from, and I'll give them examples or chart presentations on the charts, right? Like something like this. So when you see market moving like this, right? This move already signifies that okay, this was already bought. If you are buying anywhere around here, this price will be too expensive for you to buy, right? You always want to buy at a discount, in the sense like you wait for some sort of retracement, right, and look for models that can make you take trades in and around these levels at a better price. Because when you want to buy, you always want to buy at a cheaper price or at the cheapest price available, right? And the opposite goes for sales. When you also want to sell, you want to sell at the most expensive price, right? When you want to enter for sales, you want to enter at premium, right, at the most expensive price. And this simple market analogy helps with trading, because we always see how market moves, and of course it also goes in tune with market structure, right? So what's supply and demand? Supply is just for sellers, while demand is for buyers. And I'm going to try to make this very, very simple with layman terms, and not to make it complicated at all. So once you can understand normal market theory, you can take that understanding into the market and it becomes way clearer, right? So when the demand for something is stronger than supply, price goes up, right? And the opposite happens. When the supply is stronger than demand, price goes down. And these are the forces that actually determine market direction. Now, what we do, because market structure is also very important, let me remove this first off. Delete this, right? So what we do, one of the first things we do when we want to do our analysis, is to understand the phase in which the market is currently at, right? So when we come to the market and we see things like this, right, you can easily tell that okay, this is an uptrend, because price keeps making new highs when it keeps going up, right? So that will be like our first criteria. Okay, fine, we already know this. So the next thing we'll be anticipating is when price breaks this place, what we're waiting for is for it to retrace into a level where we can then buy from, because we want to buy, always want to buy at the best price available, not just anywhere, best price available. And there are parameters we use, or indicators, not necessarily indicators, but there are things we look out for, right, when we want to make those decisions. Now, when price moves from points like this, right, from points like this, where you see those sudden impulse, those zones are always called demand zones, right, where the buying originated from. They're always called demand zones, right? And I will use a different color to depict this. From zones like this are always most likely, so I already have it marked here, supply zones, right? So the red ones are the demand supply, while the ash ones, or the white ones you'd call, are the demand zones. Now we see all of this happen in the charts, but what will make you pick out a zone, or maybe you say you want to sell or you want to buy, is dependent on the market structure. Now, because on this structure we see is very bullish, price is making new highs, there's no point marking out supply zones. There's no point marking out supply zones because the structure is bullish. Now, we only and can only start marking out supply zone when there's a change of structure, where something like this happens, right? And then you see this break coming here, right? So this low is being broken. Then you know that, okay, fine, this is a valid supply zone. And as you can see, just by even drawing the diagram, you see how this level interacts with this supply zone. So what we'll be anticipating in this instance is a case where price comes back somewhere here and drops, right, and drops. So the market always moves in this format, always in this format. And that's why market structure is one of the most important things to learn as a trader, because that's what informs your direction. Because once you get your direction wrong, you're already on the wrong side, no matter how good the setup is, because there's always resistance, supply levels, demand levels all around the charts. But the direction is what's going to inform your bias, right? So now, one of the best ways to identify a demand zone, just like I've highlighted here, right, is things like this. So let me erase all of this. Where is that? So let me just highlight them and just erase them one after the other, so I won't make the video too long. Like I said, it's going to be a non-edited video. I'm just going to record this and upload it, more like a bootcamp tutorial type of video. I'm not trying to make anything perfect, right? So just recording this off the bat. Okay, so I'm just getting a notification that my system is low. I'm just plug in my charger right here. Okay, so yeah, that's done. So I'm almost done deleting this, right? And of course, as you know, any question you might have, you can feel free to drop in a comment and I'll definitely answer them, right? So you see, to identify a demand zone is just like I said, and I'll still go to the chart. So you will see maybe a place where price is ranging and you see a sudden break to the upside, which causes a break of structure, because mind you, that impulse move has to lead to a break of structure to signify that, okay, we are going up, right? These levels most of the time you see are what we call a demand zone, and I'm trying to, because I indicated that I use the colors, so whenever I see this ash, you know, a demand zone. So what we'll be anticipating is On this pump, we don't take a trade. We then wait for price to come in around these levels, and then we go up on buying, right? And of course, there are different ways people take advantage. Some people use pending orders, right? And because they expect the structure not to break, they just put their stop loss below the range to keep that uptrend going, right? But I personally don't use pending orders. I wait for confirmation candles or confirmation structural shifts, right? And I'll explain that in another video, not this video. I'm just trying to introduce you. I'm going to drop another video. That will be a proper, more edited video, right? Covering more in depth, right? I was just going to drop this today, right? And of course, the direct opposite is just for a supply zone, right? Mind you, like I said, it has to break structure, right? And then the zones here is always the supply zone, right? So what we'll be waiting for is an instance where price comes back somewhere around here to then sell out, right? Now, to then go into fully what I basically look out for when I'm trading supply and demand, right? Like I said, in the first thing is number one, right? One, it has to break structure, right? It has to break structure. It has to break structure. It has to break structure. Two, it has to have an imbalance. It has to have an imbalance, and I'll do a separate video on what imbalance is, but for the sake of this video I'm just going to explain what imbalance is. So imbalance is just a space between candles where orders have not been filled. You know, in the markets we have efficient market and inefficient market. So imbalance is just means an inefficient market, meaning that because of how fast price moved away from that point, there are still orders that are left to be filled. So price has to come back to fill those orders and then go to the upside. Now, a newer way people use imbalance, they call them fair value gaps, right? But I don't use fair value gaps in that sense. I just call them imbalances and I use them, right? So it has to have an imbalance. It has to break structure, right? 3, it must be a fresh zone. And I'm going to use a trade example I caught on BTC early this month, using supply and demand. It must be a fresh zone, right? And I also use premium and discounts levels. So if I'm buying, say for buys, it must be in the discounts, and premium for sales. I would explain that. Alright, I'll explain that with the BTC trade I'm talking about. So these are the criteria. It has to break structure, it must have an imbalance, it must be a fresh zone. For buys, it must be, let me see, I think let me move this. Yeah, let me move this here. So it must be in the discount, right? It must be in the discount and it must be in the premium for sales. And like I said, I don't use pending orders. I wait for confirmation. Then for 5, I wait for a confirmation candle. Right, I wait for a confirmation candle. Confirmation English. I wait for a confirmation candle. Right, and once I see all of these things, these are the criteria I used to take my trade. Right, once I see all of these things, I shoot. I don't even need to waste time, because you know, with trading, it's all about having an edge. And once you get the edge, yes, you will win 100% of your trades, right? But your risk to reward is what always makes you money. I mean, even with a 50-60% win rate, if you average around 1:3 and you're winning just 50% of your trades, that's good risk to reward, because for every win you're making around 3%, for every loss you're losing 1%. So in a total of 20 trades, you win 10 trades, you lose 10 trades. Your 10 wins is giving you 30R, and your 10 losses is taking 10R from you. So out of 20 trades, you still have 20R, and that's 20%. So it now then depends on your trade frequency, depending on the time frame you use. As you can, I'll still go in depth in that, and I'll try to break them down into series. I'm actually going to put this smart money concept, supply and demand, in a different playlist, and I'll just keep updating it as time goes. Right. So let me now go to the chart to show you a practical example of what I mean. Now, as you can see, BTC has been selling for the longest, right? It's been selling until price came all the way down here, right? Came all the way down here and made this high, broke it, then started trading all the way down. Then I'm just trying to just give an overview. Then this happened. Then this was the most recent high he made. I'm just giving you the breakdown of the particular trade I took, right? Then price came all the way down here. Then after doing this, made a lower higher low, then made a new high, right? Then came all the way down here, right? Now in this place here, because this was the swing move that made the high, or the next thing we can see, let me do this, we would see this was an impulse move, that this was an impulse move here, and this is how I mark the candle just before the impulse. So it's not really about the color of the candle, it's just the candle before the impulse. So this was the demand zone, and if I zoom in very well, I mark the body of the candle before the impulse. You see, there's an imbalance, and as you can also see, there's also this liquidity just resting above the imbalance because it wasn't filled yet, right? It wasn't filled yet. There was another imbalance here. There's another imbalance here, just a small tiny bit of it, and that's the thing. You most times be having multiple zones. I'll do a video to explaining multiple zones, but the most important part right now is when you see the zone. So to get your premium or discount level, I use my GAM box. I just mark the swing move, right? So when you're buying, only zone you're going to be looking at to take a buy from has to be below this equilibrium, this 50% level. That's what this is your discount zone. If you see any zones here for a buy at the premium, it's not the best levels. I don't use them, right? I only use this premium when I'm looking for sales, right? But this, for the sake of this video, we're using a buy scenario, right? So now you see this has marked all our criteria. It broke structure, it has imbalance, it is a fresh zone, the imbalance has not been mitigated, price is just coming into it. For buys, it has to be in the discount, it is in the discount. Now we're waiting for the number 5 criteria, which is a confirmation, and my confirmation is just a rejection, a bullish rejection of the zone and closure. And what do we have? Then we get our rejection. So what I do, I just take the trade at that level, put my stop loss just below the lowest point in the range. I target the highs. I think I made 9R on this trade. I closed at 9R, and you just have to wait a bit, and you see, boom, went into profit. I had the trade for about a week. And you know, patience is also a very important factor in trading. I had the trade for about a week, and then we went up, all the way up, right? So this is just a snippet into one of the potential accuracy of supply and demand, and I would look to do more videos on this, right? I look to do more videos and expand more on the topic. But like I said, if you guys have any questions you might want to ask, please feel free to do so in the comment section. I would answer those questions. Alright, so yes, that'll be all for now, and I look forward, and I promise to actually post more videos. I just want to just drop this and then we'll build on this. See you guys in the next one. Stay safe and stay profitable. Bye.